Apple Inc. stock. That's why I'm here. In my last speech, I talked about buying some stock and a few simple rules in stock trading. Before you buy the stock, you should do your own research. The Yahoo Finance section gives you all the financial information about a company. All you need to do is type in the stock symbol, such as MPC for Marathon Petroleum Company, in the get quote box. After you type in the box and hit enter, it will take you to the summary page, which shows you the stock price, PE ratio, market value, and so on. The first thing I will look at is the stock price trend, whether it's going up or down. The other key performance indicators are stock PE ratio, company growth rate, revenue, and market value or capitalization. Perhaps I need to explain the PE ratio term here for those who are not familiar with this term. The PE ratio is obtained by dividing the stock price by its earnings per share. Last time I said a lower PE ratio means the stock is cheap. Typically, a company with a growth rate of 30%, it would justify a PE ratio of 30. As an older guy like me, I would like to know the dividend yield from a stock. If you own a stock with a 3% or higher interest paid, you can sleep well when the market tanks. Usually, a high dividend paying stock will not go down as much as the market drops. It will also will not move up as fast like the other stock during a bull market. To determine if a dividend stock is worth buying, we will need to look at the earning estimate for the current year and also for the next year in the analyst estimate section. In addition, we will also need to look at the projected earning growth for the next 5 years. Here is an earning table from the Yahoo Finance section for MPC. Of course, this table is kind of difficult to see. The earning estimate for this year and next is showing on the top. And then the earning projection growth for the next 5 years is at the bottom. Since last time I mentioned about Apple Inc. and Chipotle in my speech, let's look at some of the key financial data for these two companies, along with MPC and Veolia. Apple, with a stock price of $542, has a whopping market capitalization of $508 billion. It is riding high on a 50% increase in profit this year with the iPhone and iPad products. However, the growth rate for the next 5 years is only about 19%. Now looking at the PE ratio row, Chipotle is standing out with a PE ratio of 58. The annual revenue is only about $2.3 billion. and the market value is $12 billion. The price over sale dividing the market value by the revenue is about 6. For Apple, it's about 4. So people in Wall Street must be thinking that Chipotle is grown to be as big as McDonald's Corporation. This is a phenomenon of feeding friends. People are piling money up on a rising stock. MPC is a spin-off from the former American Oil Corporation. It is now only a refining company. It has a lot of revenue, as you can see, but the market value is only $15 billion. It is not a very profitable business. The profit margin is only 3.25%. There's a concern there's too much refining capacity in the United States. Recently, there are some refinery in the East Coast or in the Philadelphia has closed, which helps the stock price move up from the big 30s to the $42 level. Veolia is somewhat similar to MPC in market value and revenue, with a lot of revenue but low market value. Veolia is a French company. They are in the water purification, wastewater treatment, and transportation business. It used to be an $80 stock before the financial crisis in 2008. Last year, it went under the big teens from the $30 level because of the weak EU economy. However, we have a dividend yield of 10%. But there is concern because the weak business with the weak European economy, the company may not be able to service that. So the best opportunity for VE is the EU economy improve, but it is not certain. In conclusion, a high growth company will justify a PE ratio which is better than its growth rate. A good dividend paying stock will give you the peace of mind in a turbulent market, but over time, it will not appreciate much. There's always opportunity out there waiting for you to discover. Thank you.